time to participate in today's webinar about life insurance and cancer survivors. I'm Samantha Watson. I'm the Executive Director of the SAMFund. Michelle Zietler, our Program Director, and Lee Charlone, our Community Outreach Coordinate Associate, are both with me in the office as well. We're super, super excited to invite Ted, our presenter for today, and I'll tell you a little bit about him when we start the presentation, but just a few quick notes before we get started. So we'll be answering questions, actually Ted will be answering questions throughout the presentation if anything comes up. So you'll see on your screen there's a little box where you can type in questions. Michelle will be fielding those. If she can answer them based on what Ted has already said, she will do that. If not, we will present them to Ted and for the whole group to hear so that everyone can hear the answer. So feel free at any time during the presentation if you have a question to just type it in, and we will do our best to get to everyone's questions. And secondly, this webinar is being recorded, so if there's anything in here that you feel you want to go back to, you can certainly download this at any time from our website, and it will be made available to anyone who can't participate live. But we're really, really thrilled to have this as a resource because it's clearly a topic that affects so many of us. So to get started, I want to welcome Ted as our presenter. As a cancer survivor myself, I know that one of the biggest fears many of us have is about life insurance and that sort of stability, and whether it's ever possible for us to get life insurance when we have cancer in our history. And it's a very daunting process. And I know that I, for one, had no idea how the whole process worked. And so Ted is willing to be here with us to give a little insight into that process, to explain how the whole thing works, to explain that, yes, it is possible, even with a cancer history, to get life insurance coverage. And he'll walk us through some of the steps of how to do that. So by way of introduction, Ted's been in the insurance industry for 30 years. He's held numerous positions from salesperson to VP, Director of Insurance. Most of his career has been in management. Right now he's a partner at Main Street Planning Group, which is an independent insurance brokerage general agency. He provides life insurance, annuities, long-term disability, and long-term care insurance products to individuals. And there are wholesale distribution, assist independent life agents, PNC brokers and agencies, financial advisors, credit unions, banks, group health agents, and other insurance licensed professionals. And he will explain what all that means. But basically, Ted represents his firm represents over 40 insurance companies, which enables him as an agent to find and provide the right solution for brokers and their clients. And most importantly, he understands that one size does not fit all. So Ted, we're so honored to have you with us. We thank you for taking the time to share your expertise with us and to give some hope to those of us with a cancer history that it is possible to go forward and find life insurance coverage. So welcome, Ted, and we'll turn it over to you now.
Well, thank you for that great introduction. I really appreciate it, and I am grateful and honored to be able to help, hopefully in some small way, and support your mission of supporting young adults move forward, both personally and perhaps today education to help them. So I'm grateful to be able to invest a little bit of time. And I assume we can see my screen at this
Not
point?
yet, Ted. If you just click on the, I think that there's a little box that popped up.
How's
there
that?
you go.
There we go.
Perfect.
Great. Thank you. Okay, so let me move this forward. And thank you for that nice introduction once again of me. My contact information, email, and phone numbers are certainly available to anybody to assist afterwards or at any point in the future. What really I think we want to accomplish today is to just go through some of these bullet points, which is what is the perception with life insurance for cancer individuals who've had or have cancer, what's the reality, what's happening with underwriting from an insurance company's perspective, the philosophies have changed, what are some of the factors that are critical in moving forward in applying for life insurance from a company's perspective. You said it best when you said one size does not fit all. There are many possible outcomes as opposed to an approval or a decline. I think it's also critical, and we'll talk about not all insurance companies are the same. Drastic differences in how one company versus another will treat the same situation. And how do you personally begin to look into this? What are some of the steps you may consider taking? What should you do? What should you not do? And then finally, what are some solutions in situations where people cannot obtain individual life insurance, or where they are declined or have been declined? There are some alternatives, and we'll discuss that. So, what we hear from customers are a number of different things, and the biggest thing is that I can't get it. I can't get life insurance. I know I can't get it because I've been declined in the past, because my next door neighbor told me I can't get it, because my doctor told me I can't get it. People have felt that they've tried, and that those who have tried in the past and have been denied feel that I tried once, I'm done for the rest of my life. And as we'll see going forward, that's definitely not true. A lot of people tell us that my insurance agent tried for me, and I applied to a company and it was declined, so therefore I can't get it. And again, we'll see that that's certainly not true, because different companies will treat situations differently. From an underwriting perspective, an underwriter is somebody who works for the insurance company and will review the application, the medical, the doctor's statements. What do they know? They are fully aware, insurance companies and their underwriters are fully aware that there are new treatments, there are new developments that have a favorable impact on life insurance. So they understand that what the mortality from 10 or 20 years ago is not the same as today, and they factor that into their underwriting decisions. And we're seeing many more people becoming approved who 5 or 10 years ago were a decline. Underwriters know that family history is a factor. So when an underwriter looks at a life insurance application and all the information that they have in front of them, there are things that cause them to charge more, and there are things that are credits that are favorable. And so a favorable family history is often a big help. Mortality experience has gotten a lot better than it has, and it continues to improve. And underwriters and insurance companies are right on top of that. They know the studies, they update their records. We are continuously receiving information from companies that have improved how they would look at somebody who has had cancer. I also want to take a moment to define for everybody mortality versus morbidity. Mortality is how long somebody is expected to live, and morbidity is how well somebody is going to live, or what health issues they might have that don't cause a death but cause a deterioration in health. So life insurance looks at mortality as opposed to long-term care insurance, which people may have looked into, or disability income insurance, or certainly health insurance, which looks at morbidity. And we have many people who have applied for long-term care insurance and were declined coverage, but were accepted for life insurance. And so mortality and morbidity are two different things, and underwriters, depending on the type of coverage you're looking for, will consider those different factors. As I mentioned, underwriting philosophy is evolving. What you'll see on the screen are just 3 examples of types of cancer and how previous decisions, as recent as 2 or 3 or 4 years ago, have changed. So if we look at the first one, somebody who had thyroid cancer, it was pretty much a postpone, and then a significant postpone means no coverage offer. Come back in a year, we'll look at it again. And in addition to that, it was a surcharge, an extra premium charge. Today, that's possibly a standard offer, which is a regular offer immediately following successful final treatment. In the past, where we had it it may have taken 2 years to get a preferred rating for thyroid cancer. Now insurance companies are considering a preferred risk 5 years out. So each condition has its own parameters, but the message I want you to take from this is that for most of the conditions, underwriters are having more favorable decisions in a quicker period of time than they have ever before. And that trend is expected to continue. And if we go back to that for 1 second, postpone means not now. So there's 3 things that can happen. There's a decline, which means you're not going to get offered, and we don't expect to ever offer coverage. And companies will have a postpone, which means, well, we think we can insure this, but we can't do it right now. Maybe it's a year from now, maybe it's 6 months, maybe it's 2 years from now. So it's very critical to understand what companies are saying when they say we don't want to give you coverage. Is it not forever, or is it not for now? Because I'm sure some people have applied and had a decline in the past. That decline may be just a temporary decline due to circumstances that you may have had. These are some of the important factors that the companies look at in underwriting a client. You're very familiar, I'm sure, with most of these. The stage, the grade, the time frames, have there been recurrence of the same type of cancer, what was the location on the body, what's the treatment, how old when it first occurred, how old is somebody today. All of these things are what the company wants to know and take a look at, and they will need to know in order to be able to make an offer. In particular, what's critical on the bottom there is, have the follow-up test been normal? Any tests, when you go for the semi-annual or annual test, are these follow-up treatments and tests normal? What kind of medication is somebody taking now? These are important factors that will help somebody in an underwriting capacity to make a decision that could be favorable. And again, here, I know this is a busy slide, but I thought it was important to share that there are a lot of outcomes available. They will look at each situation individually, and these are real examples from situations from customers we've had in the past that we will look at, an underwriter will look at favorably, and they will be able to make an offer. So if we take a look at leukemia, we can simply see that ALL or AML may be considered after successful completion of treatment. Okay, depending on the situation, many outcomes, and they could offer, a company could make an offer. It might be a standard offer, could be a preferred offer, it could be an offer with a surcharge, meaning an extra premium. They want to charge more because of this specific offer. We also have times where they'll charge more, but it'll be for a temporary. We've had situations where they'll give a client a standard offer, but they want to charge for the next 3 years an extra premium. And after 3 years, that extra premium goes away and the price goes down. So there are many, many outcomes depending on the situation, and those outcomes are becoming more and more favorable. Again, it's important to understand not all insurance companies are the same. As was mentioned earlier, we represent 40 companies. When we receive some information from a client who wants to apply, what we will find out is which companies will make an offer. We have literally looked at 12 different companies in the last case a couple of weeks ago. 10 of them said no, they would not offer, they would decline coverage. 2 of them are willing to make an offer. So their philosophies differ. Why? Because of past experience that they've had with a specific condition. They may have bad experience from insuring certain conditions and they don't want to take that risk anymore. Their philosophy may just be different on certain conditions, but it is critical to work with, an insurance company and certainly with a specialist to be able to access many, many carriers to see who is willing to make that best offer.
And Ted, I'm sorry to interrupt. I just wanted to clarify one thing. We did have a question come in, and I think what you're talking about now is sort of your role as an agent in contacting all of these different companies, right? As opposed to somebody contacting company after company after company?
Correct. So, and we'll talk about that in a couple of minutes, but since it's brought up, let me just address that. Basically, my role is we're a wholesaler. Insurance agents and brokers come to us when they need to find an insurance company for one of their clients. But if a customer is working with an insurance broker or agent, they want to work with somebody who has access to multiple carriers. And so let me just take a minute to define what that means. There are a couple of different types of insurance agents out there. One of them works for an insurance company and is an employee of that company. Some examples are New York Life, MetLife, Northwestern, Guardian. Those people are representatives of that company, and they typically will go to that company only and help the client apply to that company. And if that company declines it, they say to the client, unfortunately, we can't help you. That's a career agent working for a company. There are independent agents, and those independent agents typically represent 3 to 5, 6 or 7 different companies that they have a selling agreement with, and they can then go to those 3, 4, or 5 different companies who may or may not have a favorable philosophy or an outlook on a specific condition. Okay, our specialty is that we have 40 different companies, so those agents or brokers they'll come to us when they need some assistance with additional companies that they may not be able to, that they don't have available, or in certain medical or other underwriting conditions that they need some unique guidance and help with. So to further answer that, to further answer that question on what should the customer do, the customer needs to do a little bit of homework and some due diligence to understand what the agent they're working with is going to be doing, and should not be afraid to ask the questions. Are you only going to apply to this one company? What companies are you going to apply with? Why? They may, they can do the customer can do some research on their own and look into some companies, and also, of course, reach out to us, and we'll be glad and grateful to help anybody. Does that help?
Absolutely. Thank you so much. I just wanted to clarify that piece of it because we did have a couple questions which I'm actually going to save until a little bit later in the presentation because I think you're going to cover them. But okay. I think there was a little bit of confusion in terms of sort of how the solicitation works and who's involved. So I just wanted to clarify that for everybody. So thank you so much, Ted. Okay. Yeah, we're good.
Okay, and we can certainly discuss that in greater depth if there are follow-up questions.
Great.
But I think part of the message we want to get out of it is that not all insurance companies are the same. In fact, they are vastly different, and they will treat the same condition differently. So just because you have a no from one company doesn't mean it's no for everybody. It's important to understand that. So what are you as a potential person looking to buy insurance? What should you be doing? What should you not be doing? As we just discussed, find a professional. And that professional can be somebody who works for a career company. It can be somebody who is an independent. But it's somebody who has to have a unique understanding of your situation and the ability to look beyond 1, 2, or 3 insurance companies. Many of those agents come to us because they have a situation. So you want to work with a professional who's willing and able to reach out to us or reach out to somebody to get beyond, the 1, 2, or 3 companies. You want to do some research to find a professional, find the companies that are more willing, understand what it is that you're looking for from, what type of insurance are you looking for, because there are different types of insurance, and for time constraints we won't go into that today. What else? Understand that multiple policies are okay. We have people who buy an insurance policy from company A and then buy another one from company B, or buy from company A and B at the same time. That's okay. It doesn't, it doesn't have to be one company, take it or leave it. I think what's also important for people to understand is there's such a thing as an informal application. So I'd like to take a moment to just explain that. An informal application versus a formal application. Most people are familiar with a formal application. That's you fill out everything, you sign the paperwork, all the questions are asked, and you submit that an application to the company. An informal application is where you provide some basic high-level information, age, the medical condition, the medications, very specific detailed information on the specific condition we're concerned about. But then we informally will reach out to a number of different companies and ask them how they would treat this, how they would potentially rate or look at this client without having to submit formal paperwork, without having the client to go through blood work, without having to ascertain doctor's records. And we have a lot of success with that because most people who have this, have had a cancer, you know what the medication, you know what the stage is, you know what the grade was, you know when you last had it, you know what your follow-up treatment is, you know all of that stuff that the underwriter wants to know. And if we can supply that in basically an email with a cover letter, the underwriters will come back to us and say, here's what we think we can do, assuming everything is what you're telling us. And that eliminates this rigorous several-month process of applying to one company, getting a decline or an adverse reply, and having to start all over again time after time. And I think you need to be your own advocate and work with an advisor that will enable you to submit an informal application to 10 or 20 companies. What not to do. Don't try to omit information. Don't not tell the company something because they will find out. We have people who are on medication, prescription medication, and they don't tell us about it. Guess what? The insurance companies can go to a prescription database. There's a national prescription database. Every insurance company can look at you in that database and see what kind of prescription medication you're taking. How can they do that? Because if you fill out an application, you sign permission giving them the right to do that. So trying to omit things does not work. The companies will find it, and that will also cause them to become suspicious and potentially have a more adverse decision than otherwise. Don't apply to companies without doing the research that I've just mentioned, because you don't want to just apply to a company after company, even though it may not cost you anything. You don't want to apply to companies and have 3, 4, 5 different declines or no action taken, because again, the companies have a database where they know what other companies you've applied to, and they know what the final action is. So if they see 4, 5, 6 different declines, that causes a company to be suspicious. Okay, and don't assume. And assume goes to everything we've been talking about for the last few moments. Don't assume that you can't get coverage. Don't assume that you're a decline, if you have been a decline, forever. Okay, and then finally, what are some alternative solutions? We do have people who apply who are declines, and they ask, well, what do I do now? And I want to tell you that there are some other solutions, one of which is maybe your group insurance, the insurance you have through your company, if you have any. So you may have some life insurance that the company pays for or that you pay for. This time, as we head into October and the fourth quarter of the year, is typically open enrollments for a lot of companies. If the company permits you to buy more insurance at that open enrollment, you should be able to do so. Should be, because the underwriting is much simpler. There are less questions. They typically go to, have you been on the job? Have you missed work in the last year? If you can answer the 3 or 4 questions, you should be able to buy additional insurance without going through doctor statements, blood tests, or anything through your group. One of the other areas is what we call voluntary worksite. So more and more companies are offering employees to be able to buy different types of insurance through your payroll deduction on a voluntary basis. So if you work for a company that has 50 employees or 5,000 employees, many of these companies are coming in and opening the doors to purchase other types of insurance on a voluntary basis. One of those is very popular is life insurance. The advantage of doing it that way is it's always simple underwriting. Simple underwriting meaning they don't necessarily ask all the medical questions, they don't take your blood, they don't go for doctor's records, and therefore you can get approved on a standard basis on a very simple basis. If your company offers worksite, voluntary programs, and these are things like you may have heard of AFLAC, is a voluntary type of indemnity product. Companies offer pet insurance on a voluntary basis, but life insurance is one of those products that are offered on a voluntary basis where you're paying for it, it's coming out of your paycheck, the pricing is standard pricing, and it's very simple underwriting and a simple issue. Even people who've gotten declined can get coverage. Other possible solutions, there are life insurance products out there that are called guarantee issue. That means there's no medical questions at all. No medical questions. You're guaranteed if you pay for it, you have the life insurance. Obviously it's more expensive because the people who buy those are people who cannot get insurance elsewhere. And the death benefit is also what typically is known as a graded benefit, meaning if you die within the first 3 years, the only thing is your beneficiary will receive is your premiums back. But if you live for the next 3 years and then die at some point in the future, the full death benefit is payable. Those types of policies are good. However, they're very restrictive. Various states have different rules. Most states do not permit somebody to buy that unless they're at least 45 or 50 years old on a guarantee issue type of product. But again, every state has their own rules. So, just to summarize that, look at your work, see what's offered at work, look at what your company offers on a work site. If they don't offer a voluntary work site product, go to your HR and demand or ask for work site. The advantage of those is it costs the employer nothing. If they're just giving the company time to come and visit with all the employees for a few minutes, and they're opening a payroll slot, but there's no cost to the employer, yet significant advantages to employees. And the key is voluntary. That means not everybody has to have it. So if there's 50 employees and 10 want it, that's great. That can work. So if your company doesn't offer a worksite program or product, ask your HR to install one. You'll be able to get some life insurance on a simple or guarantee issue basis, very reasonable cost, and a very good product. The other advantage of that product is it's portable, which means if you leave, you retire, you quit, you get laid off from the company, you still have the product. They can't take it away from you like typical group insurance. So I think I am finished with the formal part of the presentation, and if there's questions, I'll be glad to try to help.
Thanks, Ted. Well, we do have questions, so that's great. Glad to have some time here at the end to answer them. So, okay, we have a few that came in. I'm just trying to decide where it makes the most sense to start.
Okay.
So actually, the very first question that came in had to do with denials. If you seek insurance and you get denied and you get denied and you get denied, at what point do you stop? At what point do you sort of give up? Because I know at some point in the presentation you also said that insurance companies have access to what other insurance companies have done, and if they see that you've been denied X number of times, it might affect the outcome for them. So at what point would somebody with a cancer history, let's say, just say, you know what, it's not worth it right now, it's not worth the time, or whatever? When do you stop?
I think the answer to that is you stop for now, but not forever, because depending on the type of cancer and the age, and depending on the unique circumstances, time is a great equalizer with life insurance. So if somebody, they finished their last treatment a year ago and they applied today and they get a denial, as we saw earlier in some of the slides, 3 years out, 5 years out, now all of a sudden you're going to get you can get a standard, you can get offers. So a denial for today or a denial 3 times for, in the past doesn't mean denial forever. And I would just kind of put an asterisk on there, again, depending on the specific circumstances or the condition or the age, of that individual. I also want to clarify what you mentioned and I mentioned earlier, which was, if other companies see you've been denied 3, 4, 5 times, what that does is raise a flag. It doesn't mean they're going to bring out the big decline stamp. It does mean that they're going to want to dig into it a little bit more and say, why were you declined? Again, the underwriters, they understand. They know that if it was 3 months after your last treatment or you have something active, it made sense to decline. But they want to just understand what the reason why. So that's why I say up front is if somebody was denied in the past, tell the insurance company up front. I applied in 2011. I was declined. This is the reason they declined me. I'm applying now, and here's my current information.
Great.
Does that make sense?
Absolutely, and I think it seems like the key part is, having that conversation with the person who's helping you find coverage as opposed to the company that could be offering you coverage, and just having that open conversation, with somebody like you who's then going to pitch it to different companies and try and find a good fit. So we actually did have a question somewhat related to that I want to read to you as well, and that has to do with the type of information that insurance companies get and how they get it. You did mention the prescriptions and the medical records and stuff, but somebody had a question on what needs to be disclosed to potential insurers, and the question came from somebody who has been a cancer survivor for more than 10 years. So how that person would sort of go about emphasizing the length of time since the diagnosis rather than the illness itself.
So there's a few components of this whole application process. One is the application itself, and if you've ever applied for life insurance, there's a lot of questions, and they need answers. So somebody who's had cancer, and it was 10 years ago, the questions are going to be asked and answered, and the questions range from have you ever had, what have you had, and then we have, we'll fill out as much information as we can. As far as what does an insurance company have a right to know, the answer is pretty much everything, because you're signing permission, and everything means they'll look at your driver's license, and they'll look at the prescription database, and they'll look at what the other companies know in this, there's a shared database. But they'll also write to your doctor or doctors or hospital and ask for medical records. So in this specific example, somebody who completed treatment and is cancer-free for 10 years and has been going to their doctor every year or every 6 months, the company will see that. They'll see the records from the doctor that says the last treatment was 2003. The last blood test. Here's the copy of the results, and they'll, that's all favorable. The company will order a medical, which is somebody comes to your house for business and takes your blood and takes a urine sample. They may do an EKG. They probably will take your blood pressure and take your height and weight. So they'll take all of these things and put it all together, and it sits on the underwriter's desk who will make an offer. Beyond that, the what you need to do up front, the only thing you can do as an applicant is really give them as much information as possible that paints a favorable picture. The professional agent will put a cover letter with the application. Say, I've known this applicant for 6 months or 16 years or 6 days, and here's what I observe. What else can you do? Lifestyle. If you have some lifestyle that is above the average American, meaning you jog every day, or you never smoked, or you don't drink, or you exercise regularly, let the underwriter in the application or in the cover letter, let them know that, because the insurance companies will provide credits. So insurance companies work on debits and credits. Debits are bad, right? All these conditions, they're charging more, but they also will look at your lifestyle for favorable credits. Oh, this guy's height and weight is good. Oh, he exercises. Oh, he has 2 glasses of wine a week. All of those are favorable credits that the driver's license is clean. So they're looking for ways, and we want to help them look for ways that says, okay, this person's on the right road. Their lifestyle is great. We want to, we can apply some credits that will give a favorable offer.
I think it's such an important point, and I'm just so glad that you said that, because I think for a lot of us, having cancer in our history is like this big dark cloud that hangs over us. I think it's going to preclude us from any number of things, and certainly getting insurance coverage is one of them. So knowing that there are things that we can do to actually make our application stronger and make us more favorable candidates, it's a really good piece of information to have, because I think it puts some of the control back in our lap, which is great. So another question that came in had to do with the difference between whole and term life insurance for cancer survivors, and whether or not there's a difference in the approval process between those two.
Okay, so the difference in whole life and term insurance, from an underwriting perspective, there really isn't much difference. What they're really predominantly looking at is the face amount or the death benefit amount, 100,000, a million, $250,000, etc. From a product standpoint, it is less important for an underwriter to recognize the product you're applying for versus the amount of the death benefit. Now, having said that, companies do have different guidelines for surcharges for term insurance and whole life insurance. So we have seen some offers where somebody would be approved for a whole life policy and not necessarily for a term policy. And the reason is because of the amount at risk and what the person is applying for. So I think the answer really, to sum it, is that it's the total amount at risk that the company is underwriting for, and less the type of product. There's a little bit of a factor that could come into play, but I think that shouldn't be the client's concern. The client has to apply for what's best for them.
Great. So the next question that came in, is it worth buying at age 22?
Is it worth buying at age 22? The answer is yes, from 2 or 3 different reasons at least. One is, the younger you are, the cheaper it is. So life insurance is based on age, and as we get older, we're closer to our mortality, we're closer to dying. Therefore, from an underwriting perspective or an actuarial perspective, the price goes up. So the first thing you're buying is you're buying something at a less cost than the 43-year-old. The second thing is you're locking in that premium, and then secondarily, you're locking in your health. If your health is good, at that point, you're guaranteeing the company can't take it away. A life insurance contract is unilateral, meaning the only person who can cancel it is the client. Okay, and you cancel by not paying it or just writing to the client. But once you have that policy, if it's whole life, you have it forever. If it's term, you have it for the length of term that you've bought 10 years fixed, 20 years, 30 years, etc. So you're guaranteeing that once you're approved, they can never take it away, or if something happens when you're 30 and your health is worse, the company cannot come back to you and say, oh, we're going to charge you more now for that product you've had for the last 8 years.
Great.
Conversely, if we have somebody who at age 20 had some cancer and now they're 22, it gets back to what we talked about earlier. They may need to wait a couple of years before they obtain an approval.
Great. So I appreciate that in the very beginning you gave your contact info, and certainly, at the SAMFund we're happy to connect people to you if, anyone emails us afterwards or anything. Sure. But if someone's looking, let's say, for an agent in their area or, whatever, how does somebody go about finding somebody like you? How do we go about finding an agent who will help us, sort of navigate this process, to have those conversations in the beginning, to submit a strong application to a lot of companies? How do we find people like you?
So I would, well, first of all, I'll make an offer that if anybody wants to find a local agent, they can reach out to me, and I can reach out to some of my contacts, and I know people throughout the tri-state area and the country, quality salespeople. So I'd be glad to recommend somebody who's qualified. Beyond that, there are certain industry associations that I would have somebody look at that, insurance professionals should be a member of, and there are also certain designations that, as we gain experience in an industry, every industry, we get certain designations, right? We continue our education. So I would look for somebody who has, there's an organization called the National Association of Insurance and Financial Advisors, and I can send this stuff to you if you'd like, that our professionals in our industry are members of that organization. There are other designations that I would look to see that an insurance professional has. I would also look to see that they have experience, a length of time, right? That they're not in the business for 3 weeks or 3 months. So which happens, right? So I would look at referral or recommendations from people who have had not just a one good experience, but have had an ongoing experience over a long period of time with a professional. I would look towards somebody who's more of an independent than who works for one of those, for one company, just because they have access to a wider range of companies.
Great. That's all really helpful information. And we'll have the slides from your presentation available for download on our website as well, so we certainly can add in some of that information that you just gave about the designations and the
oh, good. Okay.
All that. So we can talk afterwards about getting that information out as well.
Sure.
So another question came in from someone who is 33 and a 5-year cancer survivor. She has life insurance through her current employer and is wondering whether she should also try and obtain an independent plan.
So the answer I would say is with a little bit of information, I would say yes, and the reason is because, again, the age is good, 5-year survivor is good, depending on the situation and what the type of cancer was. But one of the disadvantages of insurance through the company is that when you leave that company, you don't get to take it with you. Now, in some situations, companies will let you, everybody's familiar with the term COBRA. There's something similar for life insurance. If you terminate or quit your company, the company may offer you a product, but it will be probably 10 to 20 times the price. And really nobody kind of accepts that. So the problem with group insurance is when you're not with that company anymore, you don't have that coverage anymore. And today, younger people don't stay with companies for 30 years. They find a better job, they get downsized, they go home and raise a family for a few years. If you sever from that company, you no longer have that coverage. And I think depending on that, for your coverage, it leaves a gap in what you need to do for your family.
Mm-hmm. Okay. So the last question for now, unless any more come in the next couple of minutes, actually goes back to one of the earlier questions about denials, and this may be outside of the scope of what you do and what you see. So if that's the case, it's definitely on us at the SAMFund to think about how we might be able to, answer this and provide support. For someone that's just, for whatever reason, not able to get insurance,
mm-hmm.
do you have any suggestions in terms of other financial strategies that can offset that loss of insurance? In other words, other ways to sort of go about having some sort of coverage for your family should something happen to you or whoever your beneficiaries are?
Not really. And I say that, I know the question because we've dealt with it in the last 30 years. The challenge is, for the cash that's provided immediately, at the time of death for somebody, there's nothing really else nothing else than life insurance that can accomplish that.
Mm-hmm.
We have people who say, listen, I can save, or I'll create a sinking fund. What happens if we don't reach the age and there's not that much saved? So there are strategies, but none of them will create that immediate amount of lump sum of cash that's needed when that breadwinner, when that family member is gone.
Mm-hmm.
I would also, maybe I can expand on, if somebody has a spouse, we talked earlier about other solutions, getting, group insurance or worksite insurance. If you have a spouse that's working and has coverage, a lot of companies will offer for that other spouse who doesn't work for the company to obtain some life insurance. So that may be another viable way to, if you've been declined, maybe your spouse's company offers a plan for the family and the spouse and the children. Maybe something to look into as well.
That's great, thank you. And like I said, that I know that was a little bit off this main topic, and so we'll keep thinking here about how we may be able to look into that some more, maybe for a future webinar or in some way. So I was sure that was something that you probably saw at some point, so just wanted to see if you had any thoughts. So that's great, thank you.
No problem.
And now we've had a whole bunch of questions coming in, so we'll try and fit in as many as we can in the next 10 or 15 minutes.
Sure.
Do you have any advice for people who are self-employed?
Yes, definitely. That last slide talked about that worksite or voluntary. So there are ways that self-employed individuals can accomplish almost the same thing as if they worked for a large company and obtain group insurance, which is traditional low-cost term insurance. There are ways that they can purchase permanent insurance on a simple issue basis, meaning less underwriting, no medical type of thing. So the answer is yes, definitely. Even if you're down to 1 or 2 employees, there are some companies that offer solutions to be able to obtain life insurance on a simple or even a guaranteed issue basis. And the bigger the size of the company, meaning more employees, there are more benefits or more higher death benefit amounts that can be obtained on the same simple or guarantee issue basis.
Great, thank you. So another participant asked, he's 22 and last week was told that he has a stable brain tumor. So he's wondering how long he should wait before he begins this process.
So the answer to that, or any kind of question with somebody that has a condition, is the underwriter wants to know what the final diagnosis is. And if the final diagnosis is it's stable, we're not going to do anything, we don't want to operate, we don't want to give you medication, or we're just going to maintain. If there's a final diagnosis that says we're not going to do anything other than monitor, that's more favorable than saying, okay, we're not sure and we don't know what's going to happen to this, and we have to monitor it every month or every 6 months. So what becomes critical from an insurance company's perspective is what is the, and who, let me back up a little bit, where the underwriter learns this is from the person's doctor or doctors.
Mm-hmm.
And so what's critical is what the doctor's notes and records will tell, will state when they're sent to the insurance company. And so I think another piece of advice is before you apply, go talk to the doctor. Now, doctors aren't insurance underwriters, and so they can frankly mess things up, but they can also help. So I wouldn't ask my doctor if, hey, can I get life insurance? But I would ask my doctor, what's my final diagnosis? Well, how is it going to read to an insurance company underwriter? And if what an underwriter, they can't deal with the unknown. So if the doctor says, we don't know how this is going to be, and we need to really monitor it very closely, likely it's going to be a decline for now. Remember we talked about decline for now, not forever. So that's what's if however the doctor's notes say it's stable, we're going to monitor, we don't expect anything ever to happen, and the underwriter can understand what the condition is, then we might have some opportunity to receive an offer from an underwriter. Does that make sense?
Absolutely. Absolutely. Seems like the more information you have and the more stable your condition is, the better it might be.
Yeah, and I think, when we talked about how can somebody help themselves, I think it's also having a conversation with their doctor as to what is it going to say when you send this. Very often doctors still don't tell their patients everything. I can't believe it when I see it. These things come in, but the client says, I didn't know, or my doctor. So I think it's important for you to be an advocate with your doctor from an insurance perspective and say, when you send these records to the company, what is the underwriter going to see? What is the final diagnosis going to be? What are the bad things? What are the good things?
Great. So just, I think, 2 more questions.
Okay.
The first is from someone who is a single parent and has her kids as her beneficiaries. And so actually,
Yes.
It's sort of a 2-part question, because the first is about what beneficiaries need to do in order to collect should the policyholder pass away. And does that change if their kids, in this example, the kids are under 15 years old, but presumably anyone under 18, what would they need to do? How does that process work?
So the children, if I heard you right, the children are minors? The beneficiaries are minors in this situation?
Yes.
Okay. So an insurance company, so upon the death of somebody, an insurance company looks at who the beneficiary is, and the beneficiaries fill out a form, but a claim form. But I will tell you, an insurance company cannot write a check to a minor. So they cannot pay a minor, a 15-year-old, a life insurance death claim check. The law doesn't permit it, right? So while we can name a beneficiary my minor child, it often is not the best thing to do unless you have a contingency in place. And a contingency could be you have a will that names guardians, because what happens is at the time of death, the insurance company is going to look, all right, who's the beneficiary? Well, the beneficiary is a minor. Since they can't pay a minor, now we have to go through probate, because the insurance company is not going to just decide who they're going to pay this claim to. So they're going to hold it until somebody is named as the guardian or the trustee. And who decides that? Well, a judge decides that. So now we're going through the court, and that's when my sister and my sister-in-law are fighting over the kids, and all this stuff gets kind of ugly. So my advice would be, you can leave the children as the beneficiary, but have a will drawn up, and it doesn't have to be expensive, but have something drawn up that clearly names a guardian, clearly names a trustee, somebody who can manage the money on behalf of the children. And I think the second part is There are other ways to name your child as a beneficiary. Different states have different provisions where you can name a custodian right on in the life insurance policy beneficiary section. You can name somebody as a custodian on behalf of your children. And with, I could go into detail, but I think for purposes of today, if that person wants to reach out to me, I can try to help.
Great. Thank you, Ted. So the last question that we have is about something called mortgage life insurance. I'm just going to read the question because I actually don't have any idea what that means. So I'm going to just read the question directly to you.
Go right ahead.
He wrote, there is a mortgage life insurance that my wife and I have looked into briefly. This might be an option for those with mortgages on their home.
Okay. So the term mortgage insurance means different things to different people. So there are generally two meanings. One is if I'm buying a house and the bank says I want mortgage insurance in that case benefits the bank. It's basically if I default on my mortgage, I will, the bank has bought insurance protecting them so they can get their payments from the insurance company. That example does not help my beneficiary at all. There is also life insurance that pays off the mortgage, but it's really traditional life insurance. There are some companies out there that offer a life insurance policy that mirrors or mimics the life insurance, the mortgage. So for example, if I have a $400,000 30-year mortgage, I buy this life insurance from a company that's $400,000 and it lasts for 30 years. Because in year 19, my mortgage is down to $340,000, and so is the coverage. So it's almost like a decreasing term life insurance policy that decreases as my mortgage decreases. Okay, those policies still exist, but it's typically term and it's life insurance, traditional life insurance that kind of just mirrors that mortgage. Does that help?
Yes.
Does that answer the question?
Definitely, and that actually brings us right to almost 4 o'clock. So the timing was perfect, and that was actually the last question that came in. So everyone who submitted questions had them answered, which is great. And Ted, going by the number of messages that have come in just thanking you and telling us how awesome they think you are, I know that I speak for everybody when I say that this has been incredibly helpful and empowering. I hope that the people who participated in this webinar today or who will listen to the recording afterwards feel a little bit more hopeful, a little bit better armed with information as to how to go about this, and just, have the knowledge and the comfort now to know that there is a way to pursue life insurance coverage even when you have this major illness in your history. So I just want to thank you so much for taking the time to do this presentation, for making yourself so available to everybody, and for offering up your expertise so freely. We really, really appreciate it, Ted. Thank you so much.
You're quite welcome, and it's truly my pleasure. I'm really honored. SAMFund does some great work, and if we helped in some small way with everybody moving forward, I'm grateful to be able to do that.
Well, thank you, Ted. So for everybody that is listening or viewing this, first of all, we want to thank you for taking the time as well to spend this hour with us, and we hope that you got the information that you were looking for. Certainly you can follow up with us and follow up with Ted directly if you have additional questions or you want to start this process and need a little bit of guidance. You can also check back at our website, www.thesamfund.org/webinar, for a downloadable copy of this webinar. We'll also, as I mentioned, have Ted's slides available for download. So if you don't want the entire presentation but just want access to some of the information on the slides, those will be available for you as well. So the only thing that we ask of you guys, and it shouldn't take you more than a minute or two, is to complete our post-webinar survey. When you registered, hopefully you saw the pre-webinar survey, and we use that information to try and tailor the presentation as much as possible to be as helpful to you as possible. So by the same token, we do a post-webinar survey that should only take a minute or two, and we really want to gauge the effectiveness of this program, of this presentation, and also of our webinar series, because we're continually improving on it, and we're continually looking at everybody's feedback and taking it into account when we design future presentations and choose future topics. So On that note, if you have ideas for future topics or any other feedback that you want to share with us, please email us anytime at webinars@thesamfund.org. And you'll find, hopefully also on our website, there is a bunch of other information and support available to you, both about our financial assistance program and the webinar series as a whole. Copies of past webinars on a huge range of topics, actually, from family building to health insurance to medical debt to all sorts of stuff. All of those are available on our website to download as well. So thank you again, Ted. Thank you again to everybody who has participated today, and feel free to contact us anytime. So hope you all have a great rest of the day.